Good afternoon and welcome to this exciting market data in crypto space panel. And you've done a very clever thing by coming here today, because this is going to be one of the most thrilling panels here for three reasons. First of all, we've got people who are, the most important players in this industry, and if they do what they set out to do, they're going to be Bloomberg or Reuters of the future, right? Secondly, the subject of data is one of the most important conversations of our times, and according to some intellectuals, we live in the era of dataism, which is actually threatening humanity, so that's exciting. And if this is not enough, there is also some very exciting news coming out recently about fake volumes, so that should keep everybody on their toes. So before you actually switch your attention to level 10, I'm going to introduce myself. Ania Poullain-Majchrzak, I'm a Reuters journalist, but I'm also working on a documentary about blockchain, which is going to futurecast the most important people in that space, the new Bill Gates, Mark Zuckerberg, and you can see the trailer in my Twitter. And now I'm going to say just a couple of words about our exciting panelists, and starting with Maria. She's the CEO of Kaiko, but also, she's an investor and CEO of Santiment, but also she was ranked number one fintech influencer in DACH region, and one of the top 50 most influential women in startups in Europe. And she's a free diver. She can hold her breath for 4 minutes. Yes. Yeah, it's impressive. Go ahead. And I've got those spicy information about all the panelists, so pay attention. Now we've got Ambre Soubiran, and Ambre she is the real CEO of Kaiko, and which is providing market data for to the digital asset space. She spent 15 years in HSBC. You wouldn't say that, would you? Before in Paris and London. And the spicy detail is that she's also into agri-tech, and especially she's excited about finding out how to use insects to improve animal feed. How about that? Yeah. And Nicolas, he's a serial entrepreneur and the founder of Blockchain.com, which is digital asset platform, has over 35 million users. He's a co-author of the book, The Future is Decentralized, and he made the first charitable Bitcoin donation to university. Can you imagine? But the most exciting detail I found about him is that he's got an executive assistant. So all you people who have an assistant, you have to step up and get an executive assistant. So yeah, I mean, that's impressive, right? And now, finally, Edward. Edward is the CEO of Blockfolio, a #1 tracking app for the crypto ecosystem. And because it's an early stage startup, he does a little bit of everything, apart from programming, you said, right? Yeah. And before, he was a founding board member of the Dash Foundation. And the interesting fact about him is he has also his own video game character in the World Series of Poker. How about that? Because he has won the WCOP bracelet in 2005. So yeah, that's impressive. You can clap too. Okay, now let's get to work. And just to give justice to what I said before, it's going to be extremely interesting and exciting panel. Let's go straight into the hot subject of the fake volumes. So perhaps brainstorm a little bit, how can we get the trust back? And in your projects, how do you approach this problem about ensuring your customers that the data is coming from the right sources?
Well, Santiment, I think we're mainly known of our on-chain data, so you can't really fake the data from the blockchain, so that's a good thing. So we have our own nodes on blockchain, and that's how we get most of our data. Unfortunately, the pricing data we do get from the usual suspects, and I think the problem is, as you say, is the fake volumes, and I think the only thing maybe how you can solve that kind of problem is that you have some kind of industry standards, or I think like a self-regulation of the industry. But I think it's a young industry. It's probably a little bit difficult to do. But I think that's everybody understands is a real factor. And I think we can see like fake trading volumes we can detect. For example, we have our own node in Ethereum, and we could detect during 2017 until early 2018 there was this kind of Ethereum mixer going on. That was faking the volumes that they were not real ones. So actually, what we did, we developed our own metrics to see that we can only show the real volume that exchanges hands, and not every time it's transferred inside of the system. So that's one way to tackle it. Try to find metrics to eliminate these kind of facts.
Yeah, and as far as we're concerned, so we talk a lot with regulators. They're, of course, they need to have companies like us that provide infrastructure around market data and price and volume. Right now, we don't do any treatment of the data itself, so we don't say, okay, this trade is a fake trade, this trade is a real trade. However, we do provide the market data infrastructure, which is the base layer required for people to build, machine learning algorithms to be able to identify this fake volume. There was a report published by Bitwise Asset Management quite recently that was geared towards the SEC that was looking at those fake volume issues, and they've been using our data. So really what we provide at Kaiko is an infrastructure that enables us to gather, normalize, and deliver to market participants the raw data that they can then apply their own algorithms to. So yeah, that's it. But I really agree with what you say on self-regulation. I don't think that it's going to be up to the regulators to build super complicated AI to be able to identify fake volume. I think exchanges that want to prove that they are trustworthy will just be audited, and that fake volume is something that will kind of solve itself. Like the Bitwise identified the top 10 exchanges that do have real volume, and that's kind of something that exchangers would want to get as a form of label from the industry.
Yeah, so at blockchain.com, or formerly to many people known as blockchain.info, this was the very first thing we ever built in the market back in 2011. So for anyone that was around back then, in order to learn anything about what was happening on the Bitcoin blockchain, you had to download a reference client, you had to sync it to the blockchain. It was really complicated. And everyone was talking about what was happening on the Bitcoin talk forums. So the first product we ever built was the Bitcoin Block Explorer. And we started listening to the community about what they wanted to see. And it was about community metrics for everything from currency volumes to transactional volumes to how many transactions were showing up in blocks, the rate of inflation schedule, the halvening, all those things. And that's how we actually built our very first product. And so we continue to run the most widely used and widely trusted Block Explorer in the market, and you can visit it at blockchain.com anytime and go through all the different statistical pages that we support. And we're open to all the researchers in the room and academics for feedback on how we can continue to improve providing you guys with the best data. This is a really challenging thing to deal with when it comes to self-reporting from especially the large exchanges. And it's not a big secret that there's been an enormous amount of wash trading that has massively inflated some of the volumes. This is problematic for so many reasons, for everything from price discovery to confusion about which exchanges are actually legitimate or not. There are a lot of different ways to try and sanitize that data. You will inevitably insert different types of bias when you do that. And so you have to be really transparent about how you are actually cutting information. One of the things that is coming to market now, and I think is a pretty good initiative, is a Blockchain Transparency Institute, which has some criteria when they look at specifically the exchanges. And they're only looking at exchanges that have been around for a while, that are in regulated markets where the regulator is doing things like requiring auditing and other things. And then we sense check that data against what we see on the public blockchains. Remember, the whole point of using blockchains was to have perfectly auditable record sets that everyone could see. And so when we hide all of that behind centralized services, we end up with all the same problems that the existing financial services system has. So it really is an important reminder of why doing things on-chain is so significant if we want to avoid some of the colossal pitfalls of the old financial system. But long story short, there are some really good initiatives, and I would just be cautious of people that don't put their numbers on public ledgers. You always have to be conscientious that they may be faking them.
Yeah,
Ambre?
just one thing on that subject. I think you just raised a very important point, and that's what is going to make decentralized exchanges significant in the future, right? Today, what happens on exchanges is it does not transit through the blockchain. So what we provide is literally, okay, what's the amount of bitcoins that were exchanged for dollars or any other currencies? But unless the exchange has to, basically get it out of their own accounts, it never transits on the blockchain. So there's a real opacity, and there's a little anecdote that I like, which is, I don't remember which less mainstream Asian exchange, that were announcing crazy volume, but then the fee, like the amount of taxes that they had to pay to the government was tied to the volume, right? Because they earn transaction fees. So their tax declaration was tiny and their announced volume was huge, and people were like, how does that work,
Yeah,
Thank you.
Maybe one point, because I think we always talk about the ICOs and how crazy times they were, and how people were scamming money. But I think there, for example, we have this transparency report that we publish for those ICO projects that gave the numbers, like their wallets, and you can track the Ethereum spend. And I think if the industry, if the projects are able to do it, I think the exchanges should be also required to do the same thing.
Mm-hmm. Edward, how does it look in Blockfolio?
Yeah, so we're pulling price information from over 300 exchanges to service our more than 5 million users. And, I would say, for us, I think we're looking forward towards, when things move over to DEXs and, they're going to be on-chain verified. At this time, we don't have the resources to support, any sort of verification of the volume that's going on. So I think for us, we're looking to more identify and support and partner with places like Bitwise and helping get that information out to our users, the best way to protect our users and inform them.
In the ideal world, what else needs to happen in the crypto space so you can do your work as you aim, as you wish?
Well, I think we need user adoption. I think that's I think the data is out there. So for us, for example, since we do use, the on-chain data and some behavior-based data also. So I think the data is out there. I think we need to also mature all the companies, I think, in the space and understand probably better what is the clients want. I think for us, it's clearly, it just takes time to get it, to get the data there, in that kind of format that the clients want to have. I don't know if there's, any, magic wand that's going to say that this is when this happens and everything is going to be wonderful.
And obviously, we need the market to grow, but with the incidents like with the fake volumes, everything changes. So were your businesses actually affected by this event?
You mean the report on fake volume?
Yeah.
For us, it was great advertisement. We provided the data for the report.
Oh yeah, that was good for you.
No, for us it was. It's great as far as I'm concerned in terms of for the industry and the sanity of the industry, and for a brand perspective, it was good as well. Bitwise, they're doing an incredible job, and we're very, very proud to have them as clients. Mm-hmm. There's one thing we haven't mentioned at all, and it's all the off-exchange volumes as well. Mm-hmm. So currently, large institutional investors don't necessarily place large orders on any of the top 10 exchanges, right? They go through OTC desks. Mm-hmm. And this is what Wharton does here in France, and you have B2C2 and Jump Trading, all those large liquidity providers and market makers generate quite a significant volume that nobody has any price or volume information on. It's a complete black box, and I think that this is something that needs to change. I try to speak to them, tell them this is something that's needed for the health of the industry. We need to know what's the real daily traded volume, not just what happens on exchange, which is smaller transactions. And currently, this is something that OTC desks are quite reluctant to provide volume information because it's sensitive data and because the volume is not big enough. But I really think would be an important milestone for the consolidation of the industry. Mm-hmm.
And then you, as people, because as I mentioned at the beginning, if you do what you set out to do, you will be, one of the most important, institutions in the industry. So why should the audience, why should the customers, institutionals and individual, come to you and trust you that you've got the right values and the right approach to everything you're just talking about?
Well, I think this industry is like any other industry. I mean, I think you can screw up only once. So I think it's the important thing is that, you know, you show transparently what you're doing. And as I said, since our data comes from on-chain, we can't really fake it. You know, we can make maybe some wrong calculation in the metrics, but in essence, you know, the data is there. And as you said, you know, as Ambre was saying, we can show the data that goes to an exchange when it goes through the, let's say, the blockchain channel. But what happens outside, there's not much we can do. I think in a way we need to, I think, still educate the market. I mean, there's obviously, you know, those who are in the market understand that you need to normally have data to you know, to make, you know, good educated guesses on your investments. And sometimes I think we always talk about this great boom at all these investors, you know, institutions are going to come to the space. I mean, they're already there, obviously, you know, through the OTCs and different channels. But I think there is, you know, this kind of education. We need to educate them that this is a market that you can actually understand, that there are, you know, certain kind of metrics you can follow, that it's not like a black hole or only, you know, pump and dump. And I think that's only with maturity, you know, becomes then this that, you know, it maybe changes the image of the industry.
Mm-hmm. Nicolas, with so many users, do you feel the responsibility for that you actually, you know, you're handling this important mission, I would say?
Yeah, I think for people that are new to the crypto space, just like any introduction to a new market, there's an awful lot to learn, and it can be really intimidating, and figuring out who to work with or who to trust is very challenging to navigate. I think that might be especially so in the crypto space. There's obviously an enormous amount of technical diligence that's necessary to study the projects and figure out which ones have better product market fit, which ones have teams that are probably going to be able to survive you know, long periods of time where the market may not be in their favor. So working with professionals, people that have bulletproof integrity, that have built sustainable, significant businesses in the past, that are willing to come on stage and talk about where their businesses are headed and why they're focused on the work they're doing. What kind of products have they built? Have they actually shipped anything before? Building products that thousands, tens of thousands, and then millions of people use is really hard work. And anyone who's an entrepreneur in the audience will be able to share that. Then the duration of how long those projects and companies have been around all matter a lot too. You know, for us, one of the things we're really keen on doing is educating the market. And so we've launched an entire research division at blockchain.com. You can visit blockchain.com/research to get some of those reports. It will help educate you on how to assess valuing different crypto projects, looking at things like the emergence of stable coins and what they mean. There are over 50 of those projects in market today. It can be very hard to figure out what is what. And we're trying to basically level up both the retail and institutional education levels in the market. And the people that work on these things with us at my firm are world-leading experts. On the board, besides myself and my partner, we've got Anthony Jenkins, who's the former group CEO of Barclays. We're advised by the former Securities and Exchange Commissioner of the United States, Arthur Levitt, and the former chairman of Merrill Lynch MENA region. These people dedicated their careers to sound markets and building safe financial products. And they're the people that are helping shape the future of the financial services that we see we want to bring to market. And to be clear about that, it's to build a capability for all people all over the world to send, receive, secure, and exchange value. And if we're able to deliver on that mission, we will radically make a better, more fair financial world. And that's what everyone at this conference is really still striving toward. And we have a lot of work to do still, but it is about the people you surround yourself with, and then working with high-quality professional partners.
Mm-hmm. And in Blockfolio, because obviously with so many users, I gather that you also have information about the users of data, right? So how do you make sure that actually the users trust you as a platform?
Yeah, I mean, at Blockfolio, we've always had a kind of a user and ecosystem first approach. We've never, you know, been tempted to sell any individual user portfolio data, even though we've been approached many times by both, you know, by quant funds or other entities in the ecosystem. Mm-hmm. But really, if anything, and then to take it a step further, we realized that kind of with our significant and broad reach, and we saw this sort of toxic communication environment that existed on Twitter and social media outlets as people were trying to find out about information about projects. We realized an opportunity to kind of deliver, create a direct communication channel from token teams to deliver information to users. So if anything, so we created what's called Blockfolio Signal, which is an updating and broadcasting service where token teams will log onto a dashboard and send out updates, technical updates about what's going on in their projects which is exactly what I think the ecosystem needs. What people want to find out. They want to see technical material advancements that are being made. And so this is something we've done to kind of leverage our platform for the benefit of the ecosystem and the users and our users. So.
And I think it's a great initiative because we launched our signal on it. I think that's very important to understand this collaboration that projects should actually work together. And I mean, you guys have a huge user amounts and it's great. But I think most of the projects are still trying to find their user base. And I think their collaboration is very important, and finding different ways of educating the market or educating people how you can use your data, or combine maybe the forces of using different kind of and building this kind of Reuters or Bloomberg of the future.
And Maria, looking at the user data of Santiment, what kind of trends can you predict? What can you see happening over the next couple of months in the crypto space?
Well, I don't think we collect probably not that kind of data. Of course, we collect data about what people are talking about, what is in a way trending at the moment. But I think those are quite short-term interval things. But I think there's a different thing that what we hope will happen and what might happen. I think as always we are probably a bit too optimistic, what is going to happen in the short term. But of course, from our own side, we hope to be able to provide really that kind of data that people could use, and there could be more adaptation on this data. And I think partly what we want to do, I think partly what you guys are doing and at blockchain.com is that we collaborate also with academia, because we think it's very important to provide this data for free for researchers to use and come up with ways of using it. And so we, for example, collaborate with the Tel Aviv University, the blockchain institute there, and one of the ideas we also doing is that we're promoting this kind of collaboration between blockchain projects and initiating a blockchain labs project in Frankfurt. And there's really this thing that how can projects that have already raised funding have all the intention to get in the market, how they can work together. And I think that's I probably see the collaboration as the very key into the next step.
Ambre?
Just taking a tiny step back, there's something that we all know, but I think is important to say out loud, is that the data in the blockchain space currently is all there. It's all publicly available, and what all of us here is bringing is a proper architecture and a proper infrastructure around that data to make it available and easier to consume from any market participants, be it hedge funds, investors, regulators, and even just startups, right? I mean, like as we just discussed, right? Blockfolio, in order to know what's the dollar value of your portfolio, you need exchange rates. So everybody in the market needs access to data, and the data is there. It's just a question of, hey, we're going to make it available. We're going to build the pipelines that connect all the sources of data and standardize it and make it available in a more easy way for consumers.
Yeah, I think there's some really interesting trends in the data, and then there's some broader trends in the market. And in terms of where things are going to go over the next few months, anyone that ever claims to have a crystal ball about this is probably completely wrong. You should run the other way. But it's always fun too. There are a few things that are happening though that matter. I think the emergence of retail-focused decentralized exchanges are significant, partially because of all the reasons we've just described, which is transparency and all the trading information. That's a really big deal, and I'm pretty excited about some of those projects. I think Dharma, Compound Finance are particularly interesting there. The launch of stablecoins this year is going to be a big deal. JP Morgan, Facebook is looking at it. The MUFG coin out of Japan. Those are really, really interesting. We now combine features that cryptocurrencies have had for years with fiat-backed government-issued assets. And so debates about whether or not anyone should be investing in fiat aside, these are very important for business agreements and the ability to give everyone in the world fiat-denominated digital assets. And that's a big deal. So we're going to see that. And I think that's going to drive a significant amount of adoption because it's less intimidating than highly volatile crypto assets. Key institutional infrastructure, big deal. Fidelity is launching a custody product this year. Bakkt is working through the morass of US regulatory rules, but will likely get launched this year. And that's backed by New York Stock Exchange owner ICE. That's a really big one. Actually, on the blockchain, we're seeing some really strong fundamental data. One of the key indicators that I look at as a signal for how the market is doing is always how many transactions are happening on the public ledgers. And right now, the Bitcoin blockchain, among the others, are seeing the largest and most full blocks we've had in over 12 months. So this means that people are using the publicly available financial utility infrastructure to transact with, and it's filling up again. And that usually comes with new challenges around capacity and scaling, but it pushes the industry forward, and that's a really, really strong signal. So I'm excited about those things. Probably the last one is the continuous investments from institutions. Not just normal institutions, but really big ones like Harvard's endowment, police pension funds in the US. These are like the hardest capital to get hold of, and they're investing in token projects, which means they've gone through the diligence, the team diligence, the technical diligence, and developed a investment thesis that they can put their funds behind. And that is really encouraging. Those 5 things alone are going to be pushing the industry forward this year, and I'm pretty confident about those things being positive for the industry.
Do you think that decentralized exchanges might completely replace the centralized exchanges and might solve the problem of fake volumes and etc.?
Yes, I completely think so. I think it's going to take time, but yeah. Someday, yeah.
Not going to be soon.
I think it's going to take a long time. Running decentralized systems at scale at speed is incredibly difficult. You trade off, essentially, the ability to do things quickly for having a lot of resiliency. And getting that right will take time. So I'm very encouraged by the developments, but again, we all need to be patient through that process, and then people need to test them, and there's a lot of work to do.
But however, on that matter, I think that as we talk more and more about the security token developments as well, and the idea is basically, okay, blockchain has enabled people to represent ownership of an asset under a digital, decentralized, permissionless form, and this can be applied to other types of assets, not only digitally native assets. You need utility tokens for the economic incentives of blockchains to function, but then the actual asset that is represented by your token could be anything. And so I see a world where decentralized exchanges makes more sense in the context of traditional assets that have been tokenized and that don't require super high speed, super high volume, and for which decentralization actually makes sense. And so I think that there's going to be a kind of twofold development of decentralized exchanges, and that we're going to see developments of designated decentralized exchanges for specific types of assets that have been tokenized, but that indeed the large-scale trading of the top 10 cryptocurrencies will still need speed and efficient order book and engine matching and all of that, which will take time to happen on decentralized exchanges.
Edward?
Yeah, as far as trends go, I saw a recent chart that was pretty interesting to me, which showed the Bitcoin transactions in undeveloped countries versus Bitcoin transactions in developed countries. And in undeveloped countries, you're starting to see a rise in the transactions that are occurring, which is great to see because it actually evidences utility.
Yeah, we've seen that too. So frontier and emerging markets have been really strong over the past 12 months. Brazil, Russia, Ukraine, basically ex-Soviet states, all very, very big.
Yeah, super excited to see custodial services, staking services, lending platforms. I think the lending space is actually really interesting to me. I think, I've been in the space for quite a while, and you didn't have these financial products back in 2015. Back then, somebody was overbought in the market. They had to dump their crypto on the market. Now people can actually borrow against their crypto, or they can lend out for interest. And I think that's something that's an interesting development that we've seen in this bear cycle.
Yep.
I've got an idea. Have any of you thought about decentralizing your company, putting it on blockchain?
I would say with us, like we're constantly having discussions about how do we incorporate decentralized technologies into our platform.
Yeah.
Right. And so the kind of trade-off for us and like the dilemma is that as decentralized platforms, the user experience is very clunky. It still is. It's going to be a while before that goes away. Whereas like what Blockfolio's built its brand and its service on is in a very user-friendly, elegant platform that people can use to track cryptocurrency prices. But we've sort of discussed this concept of minimum viable trustlessness. So over time, as these trustless technologies become more usable, we're always going to be looking at ways to incorporate them into our platform.
Yeah.
Yeah, I think if you would read the original white paper of Santiment, I think that was the idea. That in the end, the platform would be, you have the, healthy token economy, that you can, people can trade the data on the insights that they create on the platform. But I think, as you say, I think it's always easy to theorize things, and then when you try to do it in practice, it's a different story. So I think it's it's a long way to go. Yeah.
And again, when it comes to the subject of transparency, because there could be voices saying that you expect exchanges to be decentralized and transparent, and so maybe the audience out there would like to know, like, how do you use your data that you aggregate about the actual customers and make it transparent? How would you react to this?
Well, in our case, blockchain.com is the world's largest non-custodial wallet service. So we don't have access to that data in the first place, which is really the whole point. And in terms of how the code works, we obviously issue all of that under an open source license. So that's really important for the software companies to put their money where their mouth is on the security design, and also explain to customers and users how these different feature sets work. Non-custodial solutions are really good for some people, but they may not be the right ones for others. And so we offer custody solutions for institutions versus retail customers that can download a wallet and instantly start to get involved in the crypto space. That's always been fundamental to one of the things we wanted to achieve, was to make every person in the world their own bank. We want all of you to be your own endpoint as an access to the future of finance. And so instead of having to trust counterparties and then believe that they're doing all of these things they say they're supposed to do, is trust no one. And there are very different companies in this space that have designed themselves quite differently and have centralized control and custody over private keys. And the whole point of this experiment was not to go in that direction, which is sort of sad that some firms have chosen it. But it's also where we see colossal collapses of data through breaches, and that's because the security designs are backwards.
I think for us, of course, Santiment was crowdfunded. I mean, we did an ICO, so of course it's very important to be transparent on how those funds that were raised from other people are used. So I think for us it's absolutely clear that we need to be very transparent.
Amber?
So we didn't do an ICO. We're really, we really operate as a fintech data company, so we're really more providing infrastructure.
And also because I suppose for you it's different because you work with institutional clients.
Right now we don't really have a decentralized business model, and we don't really use blockchain technology. We're really a market data provider, so NA.
Edward?
We're providing market data to a lot of users. I think I would say for us, trust in our platform is extremely important. Users are giving up portfolio information to us. One approach we took is we've never asked for any personal identifiable information. We don't want to know who the user is, and allow them to be able to kind of use our services without us being able to pinpoint who they are. Yeah. And so by design, that was sort of our approach. I mean, we were like, how would we want to be treated as a customer? And let's build a platform that way. Over time we've seen the benefits of this approach. I mean, we've had 3 federal subpoenas given to us, and all 3 times we weren't able to provide them the information based on what they were asking for. We had them dropped, which made us kind of really, I guess, pleased with the approach that we took. Was able to protect our users, and so.
It's all about trust in the end, isn't it, in this industry? Okay, I think we're running out of time, so thank you once more to all the panelists, Maria, Ambre, and Nicolas and Edward. Thank you all for coming and listening, and I hope you enjoy the rest of your stay in Paris and at the conference. Thank you, bye-bye.